All right, in this video, I'm going to be talking about how you can utilize time in trading because as you guys have probably heard me say before, I do three things that makes up my strategy. That is market structure, that is liquidity, and that is time. We've talked about in depth about market structure and liquidity, but what about time, right? Because I always have somebody asking me, what do you mean by time? Like, what do you mean by time? So when I refer to time, what I mean is mainly when manipulation occurs in the marketplace, but like just certain times that certain things should be happening. You got to know when that happens, right? And that's what I mean. So what I'm going to do is ICT USD. We're going to take this from Thursday. I'm going to take an example of something from Thursday. All right. So we had ICT USD on Thursday. This thing, as you can see, it just had like this really big push up, right? You can see on Wednesday, we had this push up, which was we have FOMC on that particular day that pressed this thing up higher, and it pressed this thing up higher, taking out significant buy side liquidity. All right, so we took out buy side right here. We took out buy side right here. It's taking out massive buy side, which means it's in a premium, of course. It's in an expensive marketplace, of course. And I have this storyline going into the day here. I'm coming to a brand new day. So you can see right here, it comes in after midnight, and it's starting to trade after midnight. Remember what I just told you on the higher time frame, it's in a premium, right? It's in an expensive marketplace. And then I understand, okay, I have buy side right here coming to a brand new day. Okay, I have previous day's highs, Asian session highs. Of course, I want to see it take that because that's a very strong draw, right? So I've said this before. There's a few times that I'm starting to hunt for manipulation, okay? I mean, even you'll get manipulation like right after midnight as well. That's a key time you'll see it. But what I'm mainly hunting for it is I'm hunting for it in London session, okay? Because on your typical, because this is a bearish example, so let's take a bearish expansion day. In your typical bearish expansion day, the high is going to get put in London, okay? On a typical bullish expansion day, the low's put in London. Now, are there exceptions? Yes. On days where there's like super extremely high impact news at 8:30, then yeah, sometimes that, of course, that'll take care of it. They can take care of that, and they can have the high or low form then. But I'm talking about just a typical day, right? Regular day. That's what we're looking at here, okay? And let me zoom back out to the daily chart real quick. I want you to study a daily candle. I want you to study each of these daily candles. What do you see? Look at my cursor. You see this daily bearish expansion right here? See that where my cursor is? That's where we open. That's where we open, and then price expands higher. You see this? See how it expands higher like that? What is that? That wick is manipulation. The wicks do the damage. The body tells the real story. The wicks do the damage. The body tells the real story. Meaning, this is what price really wants to do. This is just manipulation. And what you'll see is these wicks, most times, again, you know, not considering like the high impact news in New York, most times, London. All right, after 3 o'clock, okay, you'll see these highs, these lows be formed. These key manipulation runs, okay? So that is a time element. You got to understand when that manipulation is going to occur so you don't get caught in it. When a beginner trader hears markets are manipulated, right, it can discourage them. Like they're like, then how do I stand a chance? Well, you stand a chance if you can understand how it's manipulated. If you understand how it's manipulated, then you can pick it apart. There's opportunity in that, okay? And we understand that these wicks, which is what does the damage, this is where that manipulation is. Then we just ask ourselves, okay, well, if we understand the manipulation, then but now what's it going to happen? I just told you when it's going to happen. Now, there's a few times manipulation runs happen, okay? And we're going to go over it in this video, but we're going to start with this. And this is what we, of course, would call what? Judas swing. We call it a Judas swing, right? So back to the lower time frame chart. So I have this coming into a brand new day here. And we see this thing working, it's working, doing its thing. Now we're coming to 3 o'clock into London session. London session is the key time for manipulation. Notice, like right as you come into London, notice this, guys. Notice this. As soon as you come in, it takes it out. Okay, now, is it always this clean? Like, is it always like after 3 o'clock takes it? No, sometimes it'll just take it out. Your key liquidity pool, because you need that liquidity taken. You need a key liquidity pool taken. Sometimes it'll do it early. It'll do it like after midnight. In that case, I'll still wait for a 3 o'clock sweep, meaning after 3 o'clock. Has to be after 3 o'clock. But That's what I'm looking for, because this is a key liquidity pool, right? It is. It's previous day's highs, it's agent session highs, and we've already concluded that this isn't a deep premium marketplace, meaning it's in an expensive marketplace. We also already concluded that it's a higher time frame buy side. So, and now I'm coming to a brand new day here into London session, which we understand is a key time where that manipulation, where that Judas swing is going to occur. And first things first, very beginning of the day, we're pressing up, and we understand a lot of times that first move is a fake move, and it's pressing up and taking out buy side already. It's already taken out previous day highs. It's taken out agent session highs. That significant liquidity is already being taken early on. It's taking that out after 3 o'clock. My kill zones specifically 3 to 6, 8 to 11. Okay, I look for those manipulation swings after 3. Why not 2 o'clock, Mike? Well, because I go off when London begins, not the kill zone. I know some of you are thinking about the ICT kill zone. I go off when London begins, but also I've just gotten better results with this. I've tested it. I've gotten better results using the 3 o'clock sweep. That's why I utilize that so strictly. Is I gotta see a key liquidity run after 3. And then the same deal with New York. After 8, I got to see a key liquidity run. You'll miss plays. You got to get over that. You'll miss plays with any fucking strategy you have. That's just part of trading. You'll never get around that. I'm okay with that, because I know if I utilize these specific signatures, these elements of time, then it gives me an edge. Okay? So I'll look after 3 o'clock. Takes out that buy side. Boom. It's pushing up, takes it out, cleans it out. Where's it going to go? It's already a deep premium. All right, so, and then you can see what happens next. So we already take out this liquidity. It took out previous day's highs. It took out agent session highs. And we're in London at this point. All right, we're in London. It's boom. What do we got right there? Now, this is where I implement other things. So we kind of already implemented a couple different things here, guys. We talked about the time. That's one of the time elements, is after 3 o'clock, because I understand that that's a time where manipulation is going to occur. A lot of times it does occur, like early London. You look for that sweep after 3 of a key liquidity pool. There's my key liquidity pool. So we've combined a few things already. We combine liquidity, because I got to understand where that liquidity is. Okay, I got to understand it has to take some type of liquidity. I needed to take a major liquidity pool. It takes out previous day's highs. It takes out agency. That's a big liquidity pool. And then I utilize the time element to look for that sweep after 3. Now, if it was to sweep this, I say like at 1 o'clock, right? 1 o'clock a.m. And then we got a shift like we're seeing right here. I wouldn't trust that. I would wait for the 3 o'clock sweep. That's that time element. So that's why, like, it's not just market structure for me. It's not just liquidity. It has to do it at a key time. A key time, it has to do it. Okay? Because we understand that where that manipulation is going to occur. Okay? We understand where those Judas swings are going to occur. So I see this thing push up after 3 that take this liquidity. That's why we combine liquidity into the equation. It takes out previous day's highs. It takes out agent session highs. It's done with. It can no longer serve as a draw. It's done with. And now we combine market structure. How? Well, when it's having this push up, what is it in? What is the lower time frame market structure when you're having this push up right here? It's bullish, right? It's pushing up, pushing up, pushing up. We put in a short-term low right here. It's pushing up, and then boom. What do we call this? We call that a market structure shift. Strong close, and the fair value gap forms. That means we have a bearish shift. It's now bearish market structure that we're going to be operating in now. After taking liquidity, after having the time element, after 3 o'clock, having that push up. That's what I want to see. That's how I implement time. I need it to see, because I understand as a key time where Judas swings are going to occur is into early London after 3 o'clock typically. Okay? I understand that that's when it happens. And then you can see we ended up getting a really nice move lower on this after it gave me my confirmation, wrote it down, boom. So that's what we had on this thing. And that's how I utilize time in London. Now, that's not the only time. Like, there are, then we're going to go over a few different things in this video. Okay? But that's just London. All right, that's just London. I look for the move after 3, okay, into London, because I understand it's a key time where those Judas swings are going to be put in. Remember, like in a typical bearish expansion day, the high, the manipulation move, which is what you see right here, that's manipulation. That push up right there is just pure manipulation after 3 to take this buy side. But also what it's doing is it's creating sell side down below, because when it's doing this, breakout traders, momentum traders are all over this thing looking for higher prices, and it pulls the rug on them, takes it hook, line, and sinker. So it kills two birds with one stone, essentially. It takes the buy side and then it creates sell side. And we understand that's happening. We understand it's in a deep premium. We understand it's taking a significant buy. So we can put that together with all the pieces of the puzzle that we got here now. And we can understand, okay, there's our Judas swing. That's our manipulation run after 3. Time element right there, okay? That's how I utilize it. Now, for New York. Let's go to New York, though. So you can see, like, we end up selling off. Now, I'm just using this for example. I don't think on this particular day, I don't think I got it set up, but just, imagine with me, right? Imagine with me for a second. Because the thing is, this is, if I recall correctly, it's still in a premium, which doesn't mean you can't get a nice scalp play even with it being in a premium. But you, like, for example, I would look for this thing to come all the way up to this high because it's still got more than them things to move lower. But I mean, just imagine with this for a second, because I'm just want to use this for an example. Like, just how I did with that London, right? Just like how I had with London, I need that 3 o'clock sweep higher in this particular example. Now price is selling off here. And let's say, all right, so we've taken Asian session lows. So I need to see Asian session lows taken, of course, for a bullish scenario, preferably. Now, coming to New York, 8 o'clock is when I start hunting, after 8 o'clock. But it's a very similar deal. If I was to get like a push right here, 8 o'clock, it comes up, gives that shift, I personally wouldn't trust it. I need to see that sweep after 8. You'll miss some plays, but again, that's what I like to see to play it safe. I like to see another run lower into 8 o'clock to take liquidity. Because a lot of times you will see it create that sell side right before a new session begins, just to take that sell side, all right? So for example, like say it pushes up, it creates that sell side and then it has a push lower, just like that, to take that sell side. I like seeing that. I like seeing that push, just like after 3. I like to see that run of liquidity. I like to see the same thing here, because what's it taking? Now it is like we are still technically, London goes into 11 o'clock a.m. Eastern time. We're still in London, but it's taking out the current London lows into New York. That's a key liquidity pull we're taking. It's taking out the current London lows into a brand new session into New York here. That liquidity is taken. It's done with. Okay. I like seeing that. That's what I like to see. And of course, I also have Asian session lows that's already been done with. That liquidity's gone with as well. So I have significant sell side taken. All right. And then after it does that, that's where I utilize market structure again. After I have that key liquidity sweep, it takes out the sell side that it just created prior. That's what I like to see. I like to see it create sell side prior to the new session begins. Take out that liquidity that it just created, and then have a shift up higher. Which you can see in this case, it never gave any setup on this particular day. It's just a consistent bearish downtrend, which we kind of already talked about why that happened. It was in a premium. There was just no setup on it in New York, because it was in a premium. It never gave any type of confirmation, and it's just wanted lower prices. But you get the gist of what I'm talking about. Like, we want to see that sweep, we want to see that shift, and then I want to see a reversal. Like, say you have that come down to a key point of interest, takes liquidity, you get a shift, it's starting to take significant sell side discount, boom, you could get a nice reversal opportunity. But I need it after 8 o'clock. I need that move, that liquidity run after 8 o'clock. That's that time element, okay, that I like to implement, okay? Now, that is with Forex, because again, like London, you got to understand like where your Judas swings, where your key manipulations are going to occur, where highs and lows are most typically going to occur. Another key time to look for manipulation runs is news. So like whenever you have high impact news, like most commonly, of course, it's 8:30, and that's another key element there. So like a lot of times the first move from news is a fake run, okay? And sometimes it's a little bit more drawn out. Like sometimes it's a very quick reaction. Like it'll push up. It'll have like an immediate push up. It'll take out a key liquidity pull, and then it'll just have you go to lower time frame, look for your lower time frame shift, then you can fade it. That's for a bearish example, of course. Now, if it's just like a lot of times from news, like when it's the first move lower, like say like immediately the news just sends the thing lower, and it takes out a key liquidity pull, or maybe runs an inefficiency, and then you see a lower time frame bullish shift immediately after doing that, then I can look for higher prices. Again, first move lower, look for a shift, look for continuation. But sometimes it's a little bit drawn out too. What do I mean by that? When I say it's a little bit drawn out, sometimes it's not like immediate. Like for example, we saw this the other day, like this was FOMC, like we had 2 o'clock news right here. That's why you had such a big push up right there. That was FOMC on this particular day. And if you remember, this thing just continued to run up after FOMC. It just a consistent uptrend higher, just went ballistic, right? You remember this? It was just ramping up hour after hour after hour. And what did it run when it did this? It's taking out significant buy side right here, significant buy side right here. So when we see something like that, remember, as I've told you several times and just a second ago, a lot of times that first move from news is a fake run. So when I see something like this, like FOMC calls this thing to push up, I want you to notice how it had no significant liquidity run lower, it immediately pushed up. It immediately pushed up after FOMC, and it did not look back on that push up. We understand a lot of times that first run is a fake run. We're still seeing the first run here. It's just more drawn out, and it's pushing up, it's pushing up, it's pushing up. And what is it doing? It's taking out significant buy side. It had no type of run lower. Fake run. That's a signature for a fake run. It absolutely is, because it was caused from news. News did that. The news pressed this up to take out this buy side, but we understand a lot of times these moves from news, they don't hold up. Because what's it going to do? Well, it kills two birds with one stone. It takes out the existing buy side up above, but it also creates sell side down below, which it can take later on after the news is had its move and it's done with, and it's just completely done, right? And again, that's more of like a drawn out move. Sometimes news will be like a quick spike, and then it'll have the shift, and then it'll have the move lower. But sometimes it's like this, where it's just drawn out. It presses up, presses up, presses up, presses up. But it's still news. It's still a move that's essentially caused by news. And then you can see it gets a shift and it fades it. And that's what we're talking about. It was in a premium, so that was the case, and that also contributed. And that's a time element. That's a time element utilizing news. That's a time element. All right, so that's what we have. That's a key time where you want to look for manipulation as well. Okay. Now, for futures, for my futures traders that are watching this, there's another key time to look for manipulation runs. Remember what I told you, because this applies to futures as well. Like everything that I said right here, you can relay that over into futures. It applies there too. But one little difference for futures that you don't have right here is 930 equity bell. Okay, so like 930 equity bell is a key time where you will see. Let me actually just go to over the futures real quick. All right, we'll use this example. So 930 equity bell after 930 equity bell. Sometimes it's not like immediately after it, but basically right near the bell, I like to see what's what we would call turtle soup, of course. So for example, right here on NASDAQ, this is pressing up on this particular day. It's pressing up and it's in a premium. It's taking out significant buy side, right? This thing is taking out, look right here. It's taking out, it's making a new high day right here. See this? We got this buy side right here. It took that out right there. And then it has a pullback, and that's in a New York session. But then right here into 930 equity bell, it's in a premium, and it's taking out the current high day. It's starting taking care of Asian session highs. It's in a deep premium. It's ripping up, and it's doing this first things first. Look right here. Here's 930, and then we end up having this push up after 930, which is already in a premium. It takes out this buy side, and it has a shift, and then it comes up in a premium right here, sells off, classic ICT 2022 type of deal, and that's what you see play out right there. So basically, what I want to get to is the key time, another key time that's a little bit different from Forex, but we got over here in futures is after 930 equity bell. Like, because you need to understand, of course, whether you're in a premium, a discount, what key liquidity pools are taking out. You got to understand your market structure, all that stuff, and combine it. But right after 930 is another key time where you want to hunt for manipulation swings, okay? Because a lot of times what you'll find is that first move lower, first move higher after 930 ends up being a turtle soup, a fake run. That's another key time where you can hunt for manipulation. That's a time element that you can utilize, okay? And as I said, it's still like, even with futures, it's the same type of deal with Forex in regards to when the high and the low of the day are put in regards to coming into a brand new session. Same exact deal is what we've looked for. And yep, so that is how I utilize time in trading. That's how I do it. If you enjoyed this video, leave a like, subscribe to the channel. I'll catch you later.